our first edition of ITX, and it's with great pleasure to see such a full room. Thank you to all of you for taking your time to be here, for being part of the journey. I'm Fiona Zhang from Sinai Hotel Works, and together with Matt Gandy from Hallworks, we're very honored to be your co-hosts of today.
Selamat sore semua dan selamat datang ke ITX 2026 yang pertama kali di Indonesia. A little out of breath. Okay, so we're here. Thank you very much for coming. It's an honor, a privilege. We're a little overwhelmed by the number of people that have turned up. We'd particularly like to say thank you to our sponsors and our exhibitors. When it comes to networking, at the end of the day, you'll see some booths outside the ballroom, and throughout today's sessions, you'll see some logos up on the holding screens.
And also special thank you to the Langham Jakarta. Without your support, this event wouldn't have been possible.
Thank you to Buhiba and Pa Alex above else, because we've been bombarding you for 2 months now with messages. Appreciate the patience and getting this show up and running. In terms of the show, we gave them a very easy brief. We wanted authenticity, we wanted Indonesia, and I think they nailed it. I think that's what today is all about. It's about Indonesian tourism and hospitality. It's about you. It's about warm, heartwarming, and also it's about fun.
Exactly. For today's program, for the next 2 hours, we'll be having 8 sessions. From investment, the luxury property and hotels, to branded residences, design, ownership reset, technology, and sustainability. None of this would have been possible without our speakers, many of whom travel from far. Thank you so much for all the speakers, for taking your time for being here, and also for helping us to reimagine the journey of Indonesia tourism.
Thanks, Fiona. Everyone sit back, relax. It's going to be fast. There's a lot of information. First cab off the rank is a very dear friend of mine, Douglas Ramage from Bauer Group Asia, talking about investment outlook in Indonesia. Let's go.
John.
Cab off the rank, Matt, after that introduction, especially because I'm talking about something which is a little bit, can feel a bit dry. We'll try not to make it dry, and that's Indonesia's investment climate. If we can just tee up the presentation, and I understand, yeah, there we go, that's also boring. And look, it's a good thing we're meeting today, because the government has just released its growth statistics for Q1. Look, it's not quite scorching, but this is a really good number, if you believe the numbers, and I think we still more or less can, you take a little bit off and it's still true. Look, even if you cut this by a little bit, it's still one of the best growth rates in the G20. We also know where the growth is coming from. So this is going to, all our businesses operate in this environment of whether we've got growth, whether the economy is growing, whether there's strong consumer demand, etc. So household consumption, traditionally one of the big drivers of economic growth in Indonesia, we're up 5.5%. This is the big story, and this is what is so different about this government of President Prabowo Subianto. Government spending is being pushed out in a really unprecedented way. It's up nearly 22% in Q1. It's extraordinary. That's the free meals, village co-ops. There's lots and lots of critical debate about whether this is money well spent, but it's money which is being pushed out from Indonesia. And according, these are government statistics from the BPS, the National Statistics Agency, accommodation and food services are the fastest growing sector in the economy, according to the government just days ago. Now, money is flowing, it's flowing and reaching Indonesian consumers, and we know that for a couple of things. I just mentioned the free meals program. Don't underestimate this number. Nearly $22 billion is flowing in Indonesia. Again, well spent or not, good program or not, different question for a different day. We also have huge fuel subsidies. This is really important. Consumer confidence is actually doing quite well right now in Indonesia, compared to most markets in the region. Why? Because the Indonesian government has made a very clear and tough decision to absorb the entire cost of the increase in fuel prices because of the Iran war. They decided not to pass those on to Indonesian consumers. Had they done that, spending during Lebaran would have been far less than it is now during the Mudik and the traditional homecoming season. The government classifies Bali and Nusa Tenggara as a region, and they say that this part of the country has the highest growth rate in Indonesia in Q1, hitting nearly 8%, again, according to the government. Domestic demand clearly continues to do the heavy lifting for Indonesia's economy. Household spending alone has driven this economy for 25 years. It continues to do so, continues to give us a stability and a bit of protection that other markets in the region don't always have. There is a however. Demand is strong. Q1 growth, even if the number has been pumped up a wee bit, is still quite good. Good globally, good by Indonesian standards. But foreign investment is flat. Last year, the first full year of the new government, after 10 years of President Jokowi, saw foreign investment flatline. It went down just a little bit. Why is this important? It's important because after the reforms put into place by an investment-minded president for 10 years, reducing logistics costs, removing restrictions on most, not all, but most areas of foreign investment, the last 5 years, starting during COVID and continuing until beginning of 2025, saw Indonesia's fastest ever year-on-year increases in foreign direct investment, unparalleled in the country's history. It is real. Double-digit increases year-on-year. Really, Indonesia needed to sustain that momentum to catch up to the kinds of FDI which have powered the economies elsewhere in the region, such as Vietnam, India, Malaysia, and so on. But unfortunately, it looks like we've lost momentum. So that has flatlined. In an environment in which, despite the global trade wars, those other economies, India, Malaysia, Thailand, Vietnam, they attracted record-breaking amounts of foreign investment despite the global tensions, despite Trump's trade war and so on. So the big reforms seem to have been paused. There's less spending on infrastructure, and we seem to have a government with very different priorities, and it's no longer talking about foreign direct investment reforms. That's a change. And then, of course, I would hope and assume almost everyone in the room knows that Indonesia had kind of a rough quarter in another sense, right? Both Fitch and Moody's changed their outlook for Indonesia to negative. The first time they've downgraded their outlook for Indonesia since the Asian financial crisis a generation ago. It looks a bit academic-y, I don't mean to be, I'll bleep over this in a second, but look, the two men are similar in one regard. Both of them have sky-high public approval ratings. President Prabowo is currently resting just under 80%. These are real numbers from really good international standard polling agencies. You can trust them. President Jokowi was just below that for much of his term. But they couldn't be more different. They couldn't be more different. Jokowi was kind of a boring guy, focused almost entirely for his 10-year presidency on improving Indonesia's competitiveness. He argued specifically and repeatedly, we can't become a rich, wealthy, high-income nation without attracting a lot more foreign direct investment and attracting it year after year after year. His model was China and Vietnam. That's what he wanted to follow. He was focused on implementation. Most of us saw it in terms of improved infrastructure, right? We saw logistics costs start to go down. We saw the genuine improvements in logistics and infrastructure nationwide. And a very, by comparison to his predecessors and what's come after, quite a disciplined professional managerial approach. Businesses didn't get everything we wanted, far from it. Foreign investors didn't get everything that we thought Indonesia needed and our businesses needed. But we got a lot. And it showed up in the numbers in almost all sectors of foreign direct investment. President Prabowo is different. He's a big picture guy. is driven by a desire to improve Indonesian social welfare, probably overdue, probably needed some attention, hugely focused on self-sufficiency, focused on big ideas, feed 8 million people 2 nutritious meals a day and do it in 12 months. And he's reliant upon an extremely narrow number of advisors, very different from the way President Jokowi ran his administration. So for tourism, what we think this means, in a very, not to be flippant, but you're going to see, and you have seen, big announcements will be common. This government likes big announcements, as did Jokowi, but here we think what executed will be a very different story. So if we look ahead to the remainder of the year, what can we expect? Look, domestic consumption still is going to hold up. It's going to be the cornerstone of growth. Consumer confidence continues to do rather well. And we know from follow-up survey after follow-up survey, even in recent weeks, that households and families are intending to spend more on experiences, on education, on household goods, appliances, travel, and so on. Looks pretty good. It dipped a little bit in January, February, but it's back up. And government spending continues to push money from it. The president is very secure politically. Why does this matter for the business environment? Look, we had some unrest a year ago, last August, but it's a pretty safe and secure environment. And voters keep telling us in survey after survey, they're reasonably pleased with the direction of the country. So far, and that stability is essential for business in any country, in any market. Our forecast in our firm is that growth is going to hold at around 5%. Our number is lower than the government's, but it's still pretty good. But it's far from where the government wants it to be and expects it to be, which is 7 to 8%. We don't see a path there. Accommodation and food, according to our data, continues to look like a standout for the remainder of the year. But we've got some real concerns, and we'd be fools in our business, foolish if we didn't keep an eye on these 3 things. The fiscal pressure on this government is mounting. By deciding not to pass fuel price increases on more broadly in the economy, or to declare any kind of a national emergency related to fuel and energy, which is what Singapore, Malaysia, Thailand, Philippines, Korea, Japan, and Vietnam did, we're really a standout. The government is having to absorb extra expenditure of hundreds of millions of dollars a week. This is huge. And what does that do? It's pushing Indonesia very close to reaching its deficit. Indonesia's deficit is very low. It's mandated by law. And it's what the international investment community has actually loved about Indonesia for 25 years. Very disciplined spending. Indonesia almost never spends money it doesn't have. It's almost been too conservative in some respects. But this is a real concern because if they breach that, if we end up with, we'll get to the bottom one, some downgrades, there's going to be a lot of pressure on consumers. We're likely to see inflation rise. That'll be rupiah weakening as we speak. The investment climate seems to have stagnated. The Q1 numbers look good, but historically, you can't really tell from the Q1 to Q2, Q3 investment numbers. You really have to look at the whole year at once. FDI seems to have slowed, whereas it's soaring in our neighbors. And Indonesia's international credibility does appear to be eroded. Every major company in the world looked at that Fitch and Moody's report. Every one of them. And the entire focus of those reports is on concerns about a deterioration in the quality of governance in Indonesia, which has underpinned positive outlook for the country for quite some time. But one thing to note, Indonesia's sovereign ratings have not been downgraded, but they could. I don't think they will. It's not a forecast, but this really is a concern, and we need to follow this very closely. So that's it. I'll leave it there as you get into the rest of the afternoon, and that's it for me. Thanks very much.
Thank you so much. Thank you. That's a lot of great insights. Next up, we'll have Sharona and David on the luxury conversation.
Hi everyone. Fantastic to see such an amazing audience. I'm David Johnson of Delivering Asia. We specialise in marketing luxury hospitality and branded residences in Asia around the world. Sharona,
Hello.
what a pleasure to see you there.
Thank you for having me. We're talking about luxury.
We're talking about luxury hospitality, past, present, and future.
I think it's a luxury to be sitting here and talking about luxury after James did all the heavy lifting.
You did.
Yeah.
You did a pretty good job. So, luxury in the past. Let's just have a quick look at that. What's evolved? What's changed over the last, should we say, 5-10 years? How's the luxury space moved? I mean, the language as relative arbiters of luxury.
Right. I think in short, the luxury landscape has moved from scale to curation. So in the past, when travelers think about a luxury experience, they probably are thinking of, visible opulence, size, furnishings. But today's travelers, they want more than that, right? They want to have a real experience. They want a cultural-led experience. And personalization plays a big role. In the past, personalization is a premium add-on, but in today's travel, I think that's the baseline. Yeah. It's funny, we all think AI, right? The AI age is coming and what that will do to hospitality, but in the luxury segment, I think it's the opposite, that the human touch, the service is going to be even more valued and more important in today's day and age.
Goodness, you mentioned the AI part. That wasn't in our prep. No, we're not going to do that.
No, I had to say it.
No, you're quite right. So what do you see as some of the, before we talk about what do you see as some of the main drivers of luxury coming?
I think being able to give our guests a more immersive experience, localization, to give them a sense of place is important for luxury travel. I think guests really want a piece of the culture of where they are going. The food and beverage offering has become increasingly important. I mean, in the past, perhaps people want to go out and dine in the city that they go to, but today, luxury hotels are using restaurants and bars in their hotel to anchor the positioning. And can I use this hotel as an example? I think this is a great example, right? We have 3-star Michelin Cantonese restaurant brought in from Hong Kong, the Tang Court. We have celebrity chefs, Morimoto, Tom Akins. And that really has helped us in positioning ourselves in this market, attracting not only the local audience, but also attracting travelers to come and stay with us because we have these offerings.
Attracting travelers from stay, yeah, that's interesting. You can see what, in terms of focusing on F&B's really impacted destinations.
Absolutely.
It really, Seoul, for example, Bangkok, it's really impacted them city destinations. So how does it, when you look at the revenue piece, how does F&B assist there? I know we talk about positioning, but we talk about occupancy a lot. But how does it?
Good question. Again, I'm using this hotel as an example, right? Because we are in Indonesia, we're talking about Jakarta. We are expecting an occupancy growth of about 7%, rooms revenue growth at 7%, RevPAR growth is also at about 7%. But our F&B growth, we are projecting a 10% increase this year from last year. So the F&B component again is really important.
That is massive. I think it really helps when it comes to promoting the actual destination too, in terms of the whole F&B piece. When you talk about experiences, it's about personalisation, it's about experience. Have you got any examples of that that you're doing as a brand, as a group?
Yeah, I think having the right talents in place is really important. We need to give our guests a reason to come back. So having a very stable team, recognizing our guests, giving them the warm welcome back, is very critical. That's why I want to bring back to the discussion of retaining talents in the market. I think having a team that really understands what the guest is looking for, why they are here, is extremely important in the luxury environment. Yeah, because no two guests are alike, and I like to think that that is a key component.
Pretty discerning bunch. What do you see as some of the main trends in luxury, in luxury hospitality? When you talk about F&B, you talk about other aspects. What are some of the main trends that you see? Talk about personalization,
Yeah.
wellness.
Wellness is a very important component as well. I mean, we have a Transmart here that offers, very unique spa offerings. Having a good gym and catering to the different dietary requirements of the guests. Yeah, the other important component I think we are seeing a holistic offering now that's linked with lifestyle in the branded residences. I think that's going to be a trend moving into the next 5 to 10 years, where I've got some data here that that the branded residences across Asia pipeline is now valued at US 40 billion.
Very decent.
Yeah, in 2026. So that's a trend to look out for in the future.
That's great to hear. What about, we hear a lot about the power of the domestic market.
Oh, yes.
So how as a luxury brand, how are you enhancing that? How are you working with domestic market? Do you really believe in the domestic market? Domestic versus international? I'm really interested to have a conversation about that.
Yes, I think Jakarta is in a really, really good place. I mean, Indonesia has very robust and strong domestic support, and we see that growth year on year. And again, I'd like to share some data. So there are the growth in the domestic market is 15.7%. From 17.5, from 2024, 17.5%, and that's expected to grow another 10% this year. And the growth in the ultra-high net worth population is supporting that growth in the domestic market, and that really helps the luxury segment. So we're seeing a 5.5% increase from 2023 in that population, the ultra-high net worth population. And that growth is projected to continue into 2028, where the projected growth is 32% from 2023. So that's a huge number.
Does that mean then that as a hotel, the Langham Jakarta, does that mean that you focus pretty much exclusively on the domestic market? Or what about the international market? The international business traveller? How are you approaching that? It's quite a smaller market, I'm sure.
Yeah, we are no different. I mean, in Jakarta, in Indonesia, the domestic market typically constitutes about half or even more than half of the business, and it's quite the same for this hotel as well. So definitely it is a very important focus catering to the domestic market, but we also see a growth in international arrivals coming into Jakarta. Right? I have to share that the international arrivals were at 15.4 million last year, 15.4 million, and that's above the expectation of the tourism board.
15.4 last year.
Last year, and they're expecting at least a 10% growth in 2026.
You know where they're from? They're from regional markets mainly, but
Regional
they're mainly business travellers,
Yes.
not really leisure and lifestyle travellers.
Yes. Into Jakarta, yes, but into Indonesia, I suppose that's a good mix, because there are many destinations within Indonesia that's catering to more relaxed travel. But I think the main point for us is how do we transit Jakarta from being a business stopover to becoming a premium urban destination by itself. Yeah. And I think the opportunity really lies in being able to offer a holistic experience. We have seen tremendous growth in the dining and entertainment scene. We are seeing the standards of luxury hospitality being improving. And the cultural aspects are also booming a lot, right? The local designers, we have to capitalize on that. Fashion, think that's all great things. Being packaged together holistically would really help us position Jakarta as a destination in itself.
I think that's great. I think that's really important. Certainly, as a marketeer, you look beyond the product of the hotel too. You look at how it can enhance your experience, how it can open doors, open avenues, and different experiences in the city. So I think that's great. I know you have you've got Jakarta 500 years Jakarta celebration next year. So hopefully, maybe Mr. Ramage will have some insight on what the government's got planned for that. In terms of big announcements, I'm not sure.
Well, the fact that Michelin Keys came to Jakarta for the first year, I mean, is a great recognition of the potential of the city. And this hotel is one of the 2 hotels in Jakarta that's been awarded 2 Michelin Keys.
I was wondering when you were going to mention that.
Did we get an applause for that?
Yes, I was going to. But we really believe it.
Thank you!
Yeah, perfect.
Thank you.
But I mean, the key will really be is to get a Michelin guide. We see what it's in Vietnam.
Exactly.
So that would be good. However, I certainly applaud your pioneering spirit.
Thank you very much.
They're fantastic. Let's have a little bit of a talk about developers. I'm sure there's many developers and many owners in the room. What sort of as very senior in with such a brand like Langham, what sort of advice would you give to developers?
Well, location. That's point number 1. Build a hotel in a great location like this one. Number 2, I think finding the right brand for yourself. A brand that has a clear voice, a clear point of view that can differentiate from the crowded market. The luxury market is getting really crowded, and we need to stick to our brand delivery and give the customer again the reason to come back. Yeah, and I think the third is really invest in the property and invest in your people. The investment might be hefty, but the returns will come.
Thank you.
Thank you.
Sharona Shum, Regional Vice President,
Thank you
Operating.
very much.
Thank you very much. Who's David Johnson?
Thank you, David. Thank you, Sharona. Fantastic. And I couldn't agree more. I think Jakarta, having spent a lot of time here for nearly 15 years, is getting better and better. I don't think there's been a better time to come to Jakarta for food, beverage, culture, fashion, etc. On now, less from the luxury, more onto the numbers. Hotel performance trends unlocked. Let's welcome Jasper and Erastus.
Thank you, man, and good afternoon. Loving be part of chairs. No, I feel, listen, I'm going to pretend that I'm young, and you are young. So let's go with that instead. All right. Listen, we're really excited to be here, and we're going to share a little bit of data and talk around it and what it matters. And at CoStar, we have a lot of data, we can tell some stories, but it means nothing unless I have someone who actually uses it and has built up a fantastic business. So that's why I'm really happy to have Ariel. And throughout the presentation, you will have a QR code like this that pops up. If you want to download a PDF with all that stuff, you can do that as well throughout the whole thing. So please go ahead at any time. So what we're going to start by talking is about what's been happening in the last few years and how Indonesia has stretched out so much in terms of the hotel performance. It's changed fundamentally in how occupancy has dropped in the last few years and ADR keeps growing. And for once, we don't do that very often. When we compare to 2019, 42% higher rate than we had 6 years ago. It's a pretty telling story, and it's more than many other countries. Demand down a little bit. You move, what about 25 to 24? It keeps going. But surely it stopped. 26. No, it keeps going. So the first 4 months of this year is also up, 14% over last year in the first quarter. So there's a strong signal when you have that. So that's really strong growth. And where does it put us in actual terms? Well, you can see that drop. We're about 5.5 percentage points behind where we used to be, and the numbers are quite low comparatively. What about rates? That's that 40%. Just how extremely quickly we have grown. Now, there's a lot of things we can see here and say like, well, it probably should have been higher a long time ago and all that kind of stuff. But what I'm interested in, and then kind of before we get into luxury there, Eric, when we look at this, does this come as a surprise? Why does this happen? What does this happen in Indonesia? Is it just great revenue managers and great GMs? What's behind all this?
All right, I think what's interesting is, like, this is the first time I see the numbers, by the way. 25-26 is actually quite an interesting year for Indonesia because 2025 is the first year where the government actually cut their spending, right? Initially, they were planning to cut at least 50% of their spending, but in reality, they cut more than 50. So that's why all the occupancy goes down. But we see the ADR goes up. I believe, and correct me if I'm wrong, it's actually a different segmentation because what the government is actually represent the lowest ADR for hotel segment. And then when this government segment is actually almost gone in a way, then that's why the ADR goes up. But if you calculate between these two, the RevPAR actually goes down.
That is true, and we'll definitely have a look at that. But back to Sharon's point about luxury, and we are in Mangan, so we want to talk about luxury and compare that to the other classes because it's something we've seen around the world. We were talking about this with media just before this event. When demand drops, any kind of impact, it could be a disaster, it could be an earthquake, it could be COVID, financial crisis, or fiscal policies. When that drops in Indonesia, it doesn't happen to the same extent in luxury. Luxury is more resilient, and that is true globally. Luxury holds up better, it's a different source market, different types of clients, so it grows really well, and that's an occupancy. And if you look what's happening in 26, for the rest of the year we will see that other classes start going, because the numbers are still quite low, mid 60%, right? So there's room for growth. What's interesting is, of course, the rates. Because if you compare Indonesia in luxury to all these other markets, and mind you, I'm excluding London, Paris, Dubai, Singapore, Tokyo, just looking at markets. Why do I compare with India? India has a large domestic market as well, an emerging new development base, and a lot of new luxury coming, same as Indonesia, at 200, just over 200 US in ADR. You could argue that that is very affordable for what you get in terms of experience, but also from an asset class, I suppose. So when you look at this, does this surprise you? Like, and where do you see that? Like, is it going to sit there? Can Indonesia get to, say, Thailand at 300 bucks?
I mean, the luxury is always commanding the highest ADR in the market, whether you're in Bali or Jakarta. The rest, everything else, it just comes with it. But I think the luxury market, you need a lot of infrastructure to support. You know, for example, maybe you have a great location in Sumba, but then if you have only a budget airline that flies there, then it can be a problem as well. So I think, you know, the infrastructure of the government plays a big support to make sure that the rich will go to the luxury hotels.
That is true. And I suppose when you look at the particular markets, Jakarta luxury has not grown as much in the last 12 months. It's all Bali. Why is Bali so successful in growing this luxury? What is it doing that Jakarta isn't? Or can't you compare?
I mean, in terms of our international travelers, majority actually they come to Bali, right? For Bali, to Bali. Jakarta used to always be the hub or the transit area, only under the business purposes. And Bali, you know, such a small island, but it has a lot of nooks, right? You have like all this Uluwatu and Sanur and Seminyak and so on and so on. And the international traveler is very big. And especially when we see a global crisis, Russia, Ukraine, the Middle East, we always get the windfall. We always get the windfall from all these travelers becoming a long-stay guest.
That is true. Now, so let's move around this beautiful big country and not just talk Jakarta and Bali, because there's a lot of stuff happening around. And when you look at these squiggly lines, it's kind of hard to see, right? You have such extreme seasonality with festivities. Are we moving up or down? Well, it's slightly down, but you can see that it's moving up in terms of rates. And it doesn't matter if you look at Sulawesi, Jogja, Banten, wherever you look, most of these lines are gradually growing. over the last couple of years. And also in higher ADR markets, here, you know, Lombok over there, and Bintan and Batam as well. So all that's nice growth. But exactly to Eric's point, if I put in a RevPAR line, the last 12 months, most of them are below. Because that demand drop is so much bigger. So that's what I'm talking, this bifurcation of just massive lack of occupancy in hotels, but you're growing rate. And it's easy looking at it at the top, yeah, Lombok and a few others, but these core markets are not growing to the same pace. Who is growing? Well, it's all east in Bali, Sanur Nusa Dua, it's Semarang actually as well, and here in Jakarta it's south, apart from Nusa Tenggara and Lombok, so they're growing. And I don't think it is a surprise if you operate that these are the ones that have struggled more. We talked about Bogor for 12 to 18 months now. I think you know what's happening there, and in Medan, right? So that's where that stop loss has happened now, when occupancy will not drop much further. We don't see it. And if you look at Q1, let me move that red down a bit. So now, the majority of markets in the last 3 months, so in the first quarter, are now positive in RevPAR. So that's a good sign, right? So I mean, where do you see this regionally? And I'm really interested.
You're comparing this with last year, right?
Sorry?
You're comparing this with...
Yes, this is 26 versus 25.
Right. 2025, I think it's like the rock bottom of our hospitality performance economy in Indonesia. And I think anything else is just a bonus, to be honest with you. And this year, I think government has already started spending again, through different various vehicles, whether it's the Nantara or anything else, the Sovereign Wealth Fund. So I think we see a lot of positive movements if everything goes
right. But since there's so many good opportunity markets here, if I'm generous today and give you $100 million that I have lying around here, and where would you take that? Where would you invest? Where would you put a hotel? What would you do in Indonesia right now with that kind of money?
I think we should ask Alex, because he has $100 million. Well, number one, not going to build a hotel with $100 million. Gonna do something else. Just kidding. It's a travel tourism conference. I will spread my